live at the China 2.0 conference at Stanford University talking about the rise of China's internet titans. Chinese web stocks have been getting pummeled on news. U.S. regulators are looking into allegations of fraudulent accounting practices at several Chinese companies. We'll get to that in a moment, but the trend is unmistakable. Some of the biggest internet firms in the world are now based in China. The country is giving birth to innovative startups across the technology industry. It's graduating throngs of engineers and entrepreneurs from top universities. Chinese venture capital is freely flowing, up to $5.4 billion last year, 79% more than the year before. By 2015, it's estimated China will file more patents annually than the United States. It's a market with huge promise, but a market that Silicon Valley companies have found impossible to crack.
It's the largest online population in the world, nearly twice as big as the United States. But U.S. internet companies have tried and failed to get in on the China market again and again. Facebook was blocked in China in 2008. Twitter blocked a year later. Google left mainland China in 2010.
Big established U.S. players that are very successful around the world are continuing to experience troubles in China because of the issues of censorship and perhaps the inability to compete with these local entrepreneurs.
Chinese internet companies are thriving in their absence. Baidu, China's largest search engine, dominates more than 80% of the market. Sina Weibo, the Chinese Twitter, and Renren, China's version of Facebook, are exploding. Tencent has become a gaming, social networking, online commerce juggernaut. But their success comes with a price. They must self-censor content to stay in business.
Over the last few months, there have been a series of visits from very high-level Communist Party officials to the leading Chinese internet companies, particularly those involved in social media. This suggests a reminder is being issued to these companies that they owe their existence to, the goodwill of the government.
If the government pulls the plug, a company loses access to more than 500 million people now online in China, with nearly 320 million surfing the net on their smartphones. That's big business for any company. Even Google hasn't totally given up.
China is difficult to operate in for the reasons of the laws, but there's great opportunity for entrepreneurship. And I would encourage you to follow the laws, but certainly enter and invest in China.
Facebook CEO Mark Zuckerberg is certainly trying, recently visiting leaders at Baidu and China Mobile, sparking speculation about a partnership. And the message isn't lost on wide-eyed entrepreneurs who aren't giving up either.
We think that the power of the cloud, the power of software in the cloud is that it's highly democratic who can use it, where they can use it, when they can use it, and China is a very compelling market for us.
Any self-respecting internet mogul wants to outdo their competitor, and so far nobody's cracked China from here, which makes it all the more appealing, which makes it all the more dangerous, because they can see the bodies on the ground from those who tried before. But internet entrepreneurs love risk. So China is the ultimate risky play.